Good afternoon, viewers. Good morning, good evening. In different areas, we just want to welcome you to today's wellness seminar that is brought to you by JesusHouse DC's Rapha Health and Fitness Ministry. We're very excited to bring another edition of the seminar to you. Our topic of discussion today is financial and health matters. How prepared are you? Financial protection during health and life emergencies. I'm so excited to be your moderator today. My name is Latunde Bolarinwa. We have two amazing panelists, professionals, and experts in their fields. We have invited them to come today to impact knowledge. So I encourage every one of you to grab a pen, grab a pencil, grab your paper to note important information that will be shared today. I can assure you that. And I think that information that will be shared could benefit your family's financial planning today and for the future. A few housekeeping process. Please share this link with your friends, your family here in the United States, all over the world, because this can definitely impact somebody's life positively. If you haven't subscribed to the JesusHouse DC's channel, YouTube channel, what are you waiting for? Please click that subscribe button and give us a thumbs up if you're doing a good job, if you like our programs. Okay, if you have any questions, you have comments, you have feedback, please feel free to post them on the live chat. We definitely want this to be very interactive. We have asked our panelists to come today, and we want to be able to ask them all the questions. We want your questions answered. So certainly put them in the comment section below, and I will get them to the panelists. Okay, we cannot begin this seminar without inviting the Most High into our midst today. He's the one who makes time possible, because we couldn't be here if he didn't make it possible, right? And so we welcome His Highness and His presence into this seminar. And we ask that everything we do today, every word that we speak, every question that gets asked, and every answer that is given will bring glory to His name. Amen. With that settled, I don't want to waste any more of our time. Like I said, make sure you grab a pen or a pencil, you grab your paper or notebook, and be ready to get some information that I think might change your family's life, financial life, and future. Without further ado, ladies and gentlemen, please join me to welcome our very first panelist this afternoon, Mrs. Felicia Falarin. Ms. Felicia Falarin is a small business owner in PG County, where she has lived, and PG County is Prince George's County in Maryland. She has lived since 1999. She graduated from the University of the District of Columbia in 2001 with an MBA in finance. Shortly after, she opened an all-state insurance agency in Hyattsville, Maryland on October 1st, 2005. As a scratch agency with one customer, and has since grown to about 6,000 customers with a satellite location in Washington, D.C. Ms. Felicia Falarin has been in the insurance business for over 21 years, and she is licensed in property, casualty, life, annuity, and health insurance. Ms. Felicia has been a member of the Redeemed Christian Church of God, the JesusHouse DC branch for over 21 years, and currently serves as the Board of Trustees Secretary. Please, ladies and gentlemen, join me to welcome this afternoon, Mrs. Falarin. Take it over, Ms. Falarin.
Thank you so much. Hello, everyone. Good afternoon, and welcome to the Rapha Wellness Seminar. Preparing for the unexpected. Sometimes even the best laid plan can easily be undone. And we have all seen that happen with the pandemic. However, there are some plans that we can put in place to help protect ourselves and our families from the unexpected. And today I will be speaking from the insurance perspective. The first thing you think about when you think about insurance that you want to have in place, which is the most important, is the health insurance. In the case of an emergency, do you have health insurance? This, in my opinion, is a necessity, and it is easily available to everyone. You just need to speak to your agent, go online. If you, whatever state you live in this country, you can easily access it on healthcare.gov. Go to healthcare.gov, click on your state, and it will take you to the link where you can find health insurance. What is the purpose of this? And what is the benefit of having health insurance? One, what are the downsides of not having health insurance? The first thing is it could lead to homelessness. It could lead to bankruptcy. It could lead to a whole lot of things, and even death. And so you want to know that your family is protected with health insurance should you or any member of your family fall into a situation, a health emergency situation that needs to be taken care of. And so one of the first things that I want to discuss before I go into the other things is that you are protected, your family is protected, your children are protected. And your health insurance is the type of insurance where you pay a little bit of premium to get help when you're sick. And when you're sick, your health insurance company will pay to the doctors for your sickness, for your medications, your testing, and all of that. However, there are some type of things that your health insurance, your regular typical health insurance do not pay for. And that's going to be the focus of my presentation today. But I wanted to put that out there, that the basic thing that every family needs to have is health insurance. Knowing that if there's an emergency, you are protected. When you go to the hospital, you will be seen, you will be taken care of, and your insurance takes care of that. And if you do not have health insurance, you can go to healthcare.gov, click on your state, put on your information, and it will take you to a link where you can apply for health insurance. And I'll talk a little bit more about how to find health insurance and different types of health insurance towards the end of my presentation. And now I'm going to focus on what are those type of insurance that are not covered by your typical health insurance that could wreak havoc to your family, that could lead to a situation that you do not wish for. And I'm going to start with the first one, which is accident insurance. Accident happens. Nobody prays for it. Nobody expects it. Nobody plans for it, but it does happen. And when it happens, are you prepared to pay the extra expenses related to that accident? Today, an active lifestyle in and out of the home may result in a bump, bruises, sometimes a break. You could get, a few years ago, I missed a step on the staircase and I fractured my leg. I was home for 8 weeks. I've seen people who had to be home for up to 3 months. And if that happened, do you have protection? Yes, I had health insurance. My health insurance paid for my hospital bills. However, I couldn't go to work. And so if I didn't have any income, how would I pay my bills? If you had young children and you have to be home for 6 to 8 weeks, up to 3 months or 6 months, depending on the severity of your injury, how would you care for your family? Do you have something in place for that? Your health insurance is not going to pay that. You have to pay your mortgages, you have to pay your bills, you have to buy groceries, childcare, and other things. The accident insurance in this case will provide you with the cash that you need to pay for things that are not covered by your health insurance. And this is the type of insurance you buy where you predetermine how much coverage you would like. And how do you determine how much coverage you need? Is your expenses. You put a list of your expenses together, your mortgage, your bills, and all of that. You have an idea of how much you need per month if there's an emergency and you're not able to get income. And that determines how much insurance you should apply for when it comes to accident insurance. And the next one I want to talk about is critical illness. Critical illness is similar to accidents, but the difference is in critical illness, you have situations where people are diagnosed all of a sudden. Somebody you saw yesterday was looking healthy, looking very well, fell down or had a stroke. I had 2 examples in the last few months of young, healthy, male and female, different situations, had a stroke and has been home. Wasn't prepared for. The employer paid a little bit for a couple of months and then the income stopped. They're not able to go to work. They have to be cared for. They had deductibles in their health insurance that they had to pay. They had some co-payments that needed to be taken care of. And all of this was coming in on top of the actual situation that they had, which was the stroke. And these are the kind of situations that could lead to homelessness. Imagine something like that happens to you or your loved one, and you're busy trying to save their lives, and you're in the hospital. The last thing on your mind is your mortgage. And then you deal with the health situation and you come back home, you meet a note at the door saying eviction. You have to leave. Where do you go? What do you have in place? That is why it is important to have these policies and these coverages to protect yourself and your loved one so that it doesn't lead to a worse situation, even after you get healed or cured of your sickness or your illness at that particular point in time. The next one I would like to talk about is disability. Now, disability is a very wide or broad subject, but I will go over it quickly. Disability could result from an accident, and then you're unable to perform your regular daily activities. This situation could lead to you depleting your savings, because a lot of people say, oh, I have some savings, 3 months, 6 months saved up in case of an emergency, but you will be shocked at how quickly you run out of money when there's an emergency. And that is why it is cheaper for you to buy this type of insurance to protect you from such unexpected situations. Disability insurance would help you to replace your income. And it's the same way you purchase the accident insurance, the critical illness insurance, that you can purchase this disability insurance. Disability insurance will help supplement your income or lost income, as the case may be, if your employer does not provide, sick leave payment and all of that. And sometimes they do provide it, but it's not enough. They might give you up to 30 days or 60 days, but what happens if you're home for 6 months? How do you care for your family? How do you pay your bills? You have some savings. What happens when you run out, when your savings is depleted? That is where disability insurance can help replace lost income and ensure that your finances are not depleted when faced with a period of unexpected sickness on or off of your job injury. The next one I'd like to talk about is hospital indemnity. Sometimes you visit the hospital, you go for one thing and something else shows up and you end up spending the night in the hospital. These bills add up. You're not prepared for it. Hospital indemnity is a type of coverage that you can buy to help you pay the bills and take care of those expenses that you didn't plan for, you didn't see coming. And the final one here that I would like to talk about is the life insurance. Life insurance is a very broad subject. And before I get into that, before I get into life insurance, I would like to share the story of Joan on disability, and that will be on my next slide. If you please put that up. Next slide, please. Yes. So meet Joan. Joan is a hard worker and is very active outside of her workplace. She considers herself very healthy and is still relatively young. And recently, one of her co-workers suffered disability, while at home and was unable to go to work. So her paycheck stopped, and Joanne thinks about her own situation and wonders what will happen to her finances if she suffered a disability. So here are some of the things that Joanne had to think about when she saw what happened to her coworker. First thing, a major medical would only pay a portion of her expenses associated with the diagnosis or injury treatments and medication if required. The second thing is, if she misses work because of an injury, she may not get paid or receive a reduced paycheck depending on who her employers are. Number three, she has bills, rents, mortgages, groceries, childcare services that she would have to pay. She might even need to purchase special medical equipment, like in my case, when I had a fractured bone, I had to get a little tricycle that moved me around. Or for some others, they might need assistance with a visiting nurse. Next slide, please. And so considering the case of Joanne, she chose to purchase a short-term disability insurance to help protect her family and in case she misses work due to disability. So what happened to Joanne? Joanne is painting her home and she falls from a ladder. She immediately feels a sharp pain in her lower back and she decided to visit a local emergency room to help relieve the pain. Here's the treatment plan when she got there. She was recommended to see a neurosurgeon. The surgeon diagnosed Joanne with a torn disc. This was not expected. It was just a minor fall from painting a house. Joanne's doctor schedules a surgery and tells her the recovery period was going to last 6 to 8 weeks. Joanne files an online claim for disability, and so she was able to get some cash to cover her expenses while she's recuperating. She didn't have to worry about what her children was going to eat, what her family was, how she was going to pay her bills, electricity, and all of that. Joanne might even be able to get extra money to see a specialist who can make her better. Some of these expenses are not covered under your regular health insurance. And in addition to Joanne's short-term disability insurance, the major benefit is getting the monthly disability payment for the period that she was at home when she couldn't work. And that's one of many stories that we hear. Do you have something in place to protect your loved ones and yourself in the case of an emergency like Joanne's? Next, I would like to talk about cancer insurance. Nobody prays to have cancer. Most people find out they have cancer when they least expect it. Some don't even know they have it, but it happens. Receiving this diagnosis can be one of the most frightening events of one's life. But statistics shows that at least one person that you know has been in this situation. With cancer insurance, you're able to get the cash that you need to cover the cost associated with your treatment or to pay for your daily living expenses. Sometimes when situations like this happen to people, you're totally lost. You go to see the doctor tells you you have to go through chemo, you have to go through all kind of treatment. And cancer insurance can be any other type of life-threatening situation. And this happens. One of the things that happened when a friend of mine was diagnosed with cancer, she saw a doctor, saw everybody, and the prognosis was very grim. And then we found out there were some specialists outside of the state that she could see, but her insurance would not pay for it because she had to stay within the scope of what she's covered for in her insurance. But because she had cancer insurance, we were able to go out of state. She was able to see a specialist. The cost of seeing the specialist, accommodation, and paying the bills at home and making sure the children were cared for, they were able to go to childcare was covered under the cancer insurance policy. And these are things that are not covered under your regular standard health insurance. And so all of these different types of insurance that I've mentioned, I call them voluntary benefits. Why do you need voluntary benefits, and how do you get them? Based on the little bit that I've shared with you, you can understand the need for these benefits. It could happen to anyone. We have seen too many cases recently where people just wake up in the morning and they're not able to move their legs and their hands, and they're stuck at home for 6, 7, 8 months. And the family situation becomes terrible because the breadwinner is not able to bring in the money. How do you get these benefits? You can get it at your job. You can contact your HR department and ask them what benefits are available to you as a staff. And if you already have one, you may want to contact them again to go through all the available benefits and see which one of them you have and which one you do not have. It's your choice. I had a customer walk into my office the other day. She had recently lost her husband, and he didn't have life insurance. Then I asked her, do you have any benefits at your job? And she said, yes. We sat in my office here and we called a job. We called the HR department after being moved around severally over the phone. We finally reached someone. We requested a copy of her benefit. She had benefit. She had life insurance benefit, but she did not provide coverage for her husband. And so she ended up getting nothing. It was very painful to me and for her. So a lot of people might be listening to me right now. You believe you have benefit at work. Please request for a copy of it. Go through it. See what is available to you and what you have. You can make changes to it. You can add to it. You can choose which ones you want. And if you're a small business owner, you can buy this for your employees, because the wellness of your employees determines the future of your business. And it's at no cost to you because it's payroll deductible. The employees can look through the list of benefits available and choose the options that best serves their family. And they're able to also cover their immediate members of their family, their children, their husbands can be added to these benefits. As a small business owner, I would expect you, every single one of you, to apply for benefit for your employees. It is up to your employees to get it or not get it. And if you can afford it, you can buy it for them. Choose one or two that you can afford to pay for to encourage your employees. And if you're a self-employed person and you think, I don't have any employee, how would I get it? If you're self-employed, sole proprietorship, you can get one. Most of the companies that offer these benefits will require at least a minimum of 3 people to qualify for such benefits. So it could be you, your spouse, and your children. So these benefits are available to everyone, and we need to take advantage of it. It is time for all of us as a community, as a people, to start to think about making life easy for ourselves and not putting our loved ones in a bad situation when the unexpected happens. There's been way too many cases in the past few months that it is heartbreaking when you see what happens to your friends and your family members. Next, I'm going to talk briefly about life insurance. Before I get into life insurance, let me talk about Jane. Jane is another example, and this is about cancer insurance. Jane, like anyone else who has been diagnosed with cancer, she's just like anyone else. She's concerned about how her family will cope with her disease and the treatment. Most importantly, she worries about how she was going to pay for the treatment. Here are the things that weigh heavily on Jane's mind. 1, the major medical insurance only pays a portion of the expenses associated with her treatment. 2, She has a copay that she's responsible for until she reaches a deductible. Copay could be from anywhere from $10 to $3,000. Most of the time you have a yearly deductible of $6,000, and you all know the cost of cancer treatment. Your copay runs out very fast. If she's not working due to the treatment, Jane would have to cover her bills, rent, mortgage, grocery, and the children, education. It doesn't stop because you have a sickness. If the right treatment is not available locally, she would have to travel to get a treatment elsewhere. So what does she choose to do? Jane chooses the benefit, the cancer insurance benefit, to help protect herself and her family members in case she gets diagnosed. Jane undergoes an annual wellness test. You know, you just go for your annual physical and boom, Jane gets hit. You have cancer, Jane. Jane's doctor reviews the result with her and recommends pre-op testing and surgery. It provides her with the location and hospital and, you know, that specializes in cancer. However, Jane has to travel 400 miles where she will have to undergo the pre-op testing, imaging, and then she's admitted into the hospital for surgery. Jane undergoes the surgery and everything that comes with it. Hospital stay, radiation, medication, and then she has to see the doctor, follow-up visit. Jane goes ahead and files a claim. And then she's able to get money to pay for all these out-of-pocket expenses. If Jane doesn't have the cancer benefit or cancer insurance, Jane would have to stay locally and look for help wherever she can get it and whatever her insurance will cover. And then you find a situation where somebody who could have been saved, you end up losing just because you didn't have the adequate preparation to protect yourself or your family members. Next, I want to talk, before I go to questions, I want to talk about life insurance real quick. Life insurance, a lot of people say, oh, why do I need life insurance? Oh, I don't have any family yet. Why should I get life insurance? Yes, life insurance pay a benefit to your beneficiaries if you die. But the type of life insurance that we have nowadays provide a whole lot more protection and benefits than just paying a certain amount of money to your loved ones if you pass away. There are two major types of life insurance. There's term life insurance and there's permanent or whole life insurance. The term life insurance, just like it says, is an affordable type of insurance that you have for a specific period of time. So you can get $100,000 life insurance for 20 years, or you can get the permanent life insurance that provides protection for you for as long as you live, or for a term that is predetermined by you. You can say, I want it for 100 years, 120 years, or I want it for as long as I live. If anything happens to me, I want to make sure my family is cared for. Why would people choose term life over permanent life insurance? One, affordability. Term life insurance is affordable. And so you could choose, and why would you want a term life anyway, apart from being affordable? If you have young children and you estimate that your children in the next 30 years will be out of college, they will have a job, your mortgage will be paid and all of that, then you can choose a 30-year term life insurance because it is affordable. You calculate how much life insurance you need, how much money your children would need to go to college if something happens to you. What is the balance on your mortgage that needs to be paid in case something happens to you and you don't want them to get kicked out of the house? That will help you determine how much life insurance you need. And then it is cheaper for you to get the term life. And you can get it for 30 years, for 20 years, or for 10 years. The permanent life insurance, on the other hand, is for as long as you live. It costs a little bit more, but the money you're putting into this permanent life insurance, you can actually borrow from. You can cash out in case of an emergency. You don't get that benefit when you have term life. Term life insurance is like car insurance. You use it if there's need, and if you don't use it, it's gone. You can't go back to your auto insurance company and tell them you paid $600 last year, you want your money back. It's gone when you don't use it. Permanent life insurance, on the other hand, the money is there. It earns a little bit of guaranteed interest over time. You can borrow from it if there's an emergency, or your kids have to go to college, you don't have enough, you can borrow from it. And you have a specific premium. If you get your permanent life insurance at $50 a month, and you get it for your whole life, it's $50 every month for the rest of your life, or for as long as you live. However, this life insurance now have additional riders that you can add on that you don't have to die to use, like premium payment. God forbid you have a critical illness or disability or an accident and you're not able to go to work, you can meet up your payment on your life insurance. You can get a rider for that. A rider means you're paying a little bit more to have these additional benefits in case you're not able to pay your bills. You can use the rider, kicks in, and you don't have to worry about your life insurance lapsing. You can get a rider that pays you if you have critical illness. And I gave this example before for some of you who may have been on my program. We had a customer who had life insurance, $1 million life insurance. And she wasn't paying a car insurance, and we reached out to her to find out why she wasn't paying a car insurance. And she said car insurance was the least of her worries at that point in time because she was sick. And I said, oh, why didn't you tell us? She said she had cancer. I said, oh my God, I'm so sorry to hear that, but you do have life insurance. Why didn't you call? And she said, I'm not dead. Why should I call for my life insurance just because I have cancer? And I said, oh no, you have this benefit where you can take money from your life insurance, up to 80% of that, of the value of your life insurance, to take care of yourself and your family, to sort things out. And then if you get well and you beat this, you still have 200,000 left. You still have 20% left. She was in shock. She didn't know. Well, she was able to file a claim for 80% of her life insurance. She was able to put her kids back in school. They were able to pay the house. The husband was able to stop work so he could focus on taking care of her and the kids. She was able to go out of state to seek help. And she beat cancer. She's back. She still has 200,000 left in life insurance. She owns her own business now. Her husband is fine. Her family is fine. The kids are in college and they're able to take care of their family. It took a long time. This lasted over a year. But these are the kind of benefits that you can have when you have life insurance. So it is important and imperative that we have plans in place. There are so many things available to us that we can take advantage of that can help cushion the impact when the unexpected happens. And you have to consider your loved ones and yourself. My friend had a stroke a couple of months ago. We didn't expect it. We didn't see it happening. He owns his own business. And then he had a stroke out of nowhere. He couldn't go to work. The children were home. His wife was home. His health insurance paid the bills for the hospital, but they weren't paying the bills at home. He's back at home. He's gradually trying to get back to work, but it's not the same. You do not want to put your family member in a situation where they will ask you, why? Why did you not protect us? Why? Thank you very much for your time. And at this time, I'll be happy to take some of your questions.
Wow, wow, wow. Thank you so much, Mrs. Falarin, for that amazing presentation. You dropped so many gems that I'm taking note here. As I said earlier, please grab a pen, grab a pencil, and some note and a note paper, and just take some notes. And I took some notes. Number one, an unexpected illness can deplete your savings just like that. And the story of Joan will stay with me. And one of the reasons Joan's story will stay with me is because I'm also someone who likes to climb ladders and paint high places. And I've learned not to be doing that unless I have some type of insurance in place to protect me. Thank you so much, Ms. Falarin, for that presentation. We have so many questions that have come in, and I'm just going to get right to them. Oh, before I get to them as well, another one that I didn't know was cancer insurance. I thought once you have your health insurance and you were just good, that it would cover your cancer treatment. But it's good to know all this insurances and all this benefit. And another thing I heard from you was, if you're an employee, to go to your employer, your HR's employer, and say, hey, what are the benefits that are available to me? You want to know. Information is key. So again, thank you so much for sharing all these gems. A few questions, like I said, not even just a few, a lot of questions have come in, and I'm going to try and get to them as soon as possible. So the first one I have here is, for pregnant women, would you recommend they get insurance during pregnancy or after? And if during pregnancy, at what trimester?
You want to get insurance before you get pregnant. If you're planning to get pregnant, you want to get the insurance ahead of time. If you happen to find out you're pregnant and you don't have health insurance, then you want to get it immediately.
Thank you very much. And just to piggyback on that question, when is the best time to get a disability insurance or life insurance, and at what age?
Life insurance as early as possible, from infant. A lot of my nieces and nephews, their parents know when they have a baby, I'm buying their baby life insurance. That's my gift to them. And I'll give you two reasons. One, it is cheaper when they're babies. So a 1-year-old can get a $1 million life insurance, hypothetically, $1 million life insurance for $50 a month. And when they turn 18, you can turn it over to them, it becomes theirs, and they keep paying $50 a month. But a 40-year-old gentleman wants to buy life insurance, $1 million permanent whole life insurance at that age may cost you up to, based on your health status, up to $300 a month, and you have the same benefits. So imagine having it from that age, and God forbid anything happens to that child while they're going to college, they're playing college football, they break a leg, they have life insurance. They can take up to 80% of that if it's a life-threatening situation, because there are some situations where you cannot get that 80%. So you have to be careful with that. It has to be a critical illness or terminal illness for you to be able to get that kind of money. So the earlier you get it, the better for you and the cheaper it is. Disability, I would say as soon as you're old enough to start working. Because if you're earning an income, that means you have responsibilities and you have bills. And to protect your responsibility and your bills and your family and your loved ones, you want to make sure you're protected. In case something happens to that income, how would you survive?
Thank you so much. Thank you so much, Mrs. Falarin. Another question that came in is, as Africans, and a lot of our listeners are Africans or of African descent, why is it that we kind of shy away from the issue of the idea of life insurance to protect our families? And I think you alluded to it earlier that some people, there was a lady that had an illness and she had life insurance. And then you asked her, she's like, why do I have to call you? Well, I'm not dead yet. At least she had life insurance. But a lot of times I will talk to people about getting life insurance. They're like, are you wishing me dead? Or why? Why is that? And how can we change that perspective in our community?
Education. I think for those who say they don't need life insurance, it's lack of education, especially when they have young children or they have a family, a spouse or otherwise. It's lack of education because God forbid, we have seen too many situations in the last 1 year where we've had to raise GoFundMe. There's nothing wrong with GoFundMe. When I lost my dad as a teenager, there were people around. People came around, helped us for a short period of time, but after 2 months, guess what? There was nobody. You go to some of them and they don't even have time to see you. And so GoFundMe is good. It helps you with the immediate needs and all. But then what happens when that is depleted and everybody is gone? You're by yourself. Your family members may get kicked out of the home they've lived in with you. You have children that are going to go to college and they're not able to pay for their college, or their mom had to, or their dad, or whatever spouse is left has to withdraw them from private school and send them to a public school. Their lives are changed forever. And so for you to have a family, especially for those who have a family, for you to have a family and not have life insurance, I'll be careful to use the word irresponsibility, but that's the way I see it personally. And I'm sorry if anyone is offended by that. It's just your responsibility, especially when you have young children. And I think we're all educated enough now to know that this is not about me dying or anyone killing me. If you're afraid somebody is going to kill you, take them off the benefit and make sure it is for the people that it is for. And if you have to get a lawyer to write a law or write you something to say, this is what I specifically need the money for, put it there. But please make sure you provide for your loved ones. And besides, now we know there are other benefits in life insurance that are not just about dying. The terminal illness rider that you can get. Also, you can add the long-term care, which I know will be discussed in the next session, so I don't want to get into long-term care. But these are some riders that you can add to your life insurance that, look, if I become unable to work, to do my regular daily activities and not to become a burden on anybody, can you add this rider to my life insurance, that my life insurance will pay me this amount of money that I need to take care of myself for the period of time that I'm not able to work or I'm disabled or something like that. So there are so many benefits to your life insurance, so many riders that can be added to your life insurance, and you don't have to die to use your life insurance. And you can borrow from it. You can have you want to buy a house? I had someone come during COVID, and they wanted to know, they were having issues with their business. They had to shut down their business and all of that. And we were just talking. I was here throughout COVID. I was in my office. I was here every day talking to my customers, talking to people, not just about insurance, but about what they're doing, what options are available to them. And I found that he had not been able to go to work. And I said, well, it was really in dire need of money. And when I told him he had 40,000 saved up in his life insurance, he almost fainted. He didn't know. And so he was able to borrow part of that money to get himself going during COVID. And so these are some of the benefits available. So you don't have, besides the primary purpose of protecting your loved ones, in case the worst happens, there are other benefits to having life insurance.
Thank you very much, Mrs. Falarin, for that explanation. While you were speaking on riders, and I know you had talked about riders during your presentation, a few folks were also asking, can you explain more on what does rider mean? And along with that, somebody also asked, what can you expand more on deductibles? What does that mean? So if you can answer deductibles and riders, please. Thank you.
Deductible is co-payment for all your health insurance that you have. There's a deductible. A deductible is your out-of-pocket payment that you have to make when you have to go see your doctor. Sometimes you see little co-pays of $10 here and there because they are not major events. But if there are major events, there's an annual out-of-pocket deductible that you have in your health insurance. If you don't know what it is, you may want to give your insurance company a call. Find out what your annual out-of-pocket deductible is, because you may not see it on a regular day, but if there's an emergency and there's a major health situation, you find out you have a $6,000 co-payment that you have to pay out of pocket. That's what deductible is. Just like your car insurance, you have full coverage on your car, and there's an accident, the damage to your car is $5,000, and you have a $500 deductible. Your insurance company pays you for the $500, and you have to pay the $500 out of pocket. That's how deductible works. And as far as rider just simply means an add-on to your insurance. So you have life insurance and you want to add long-term care, you want to add payment of premium. So if I'm not able to pay my premium, would you be able to keep my insurance going? If you have term life insurance, you may want to consider these riders. But if you have whole life insurance, you have a benefit because you have cash accumulating on your life insurance when it is permanent life. And that cash can help keep your life insurance going for a certain number of time, depending on how much money you have there. So you won't have to worry about, oh, my life insurance is going to lapse. So these are some of the benefits of having riders.
Thank you so much, Mrs. Falarin. Honestly, there are so many questions coming in, and I'm sure like if we just continue, more questions will come in. I do want to ask this before we move on to the next speaker. We are very conscious of our time. In terms of long-term or chronic health issues like diabetes, or high blood pressure, is it too late for anyone who's been diagnosed with those kind of chronic health issues to get number one, either term life or whole life? As you mentioned earlier, whole life is a little more expensive than term life. Along with that question, what advice would you be able to give someone who has that? If they can get life insurance, whether term or whole, what would be your best advice to them essentially?
You can get insurance. You still can get insurance even if you have a pre-existing condition. It's just going to cost you a lot more. Some companies would not write it at all, but we have some companies out there that will write you even with the pre-existing condition, but it will cost you a lot. And if you are not able, for some reason, depending on what state or what company you're working with, because I can only speak for my company, then you may want to put some things in place, put some riders, disability, and I don't want to dive into long-term care because I know Mr. Tawe is going to speak extensively on that in the second half, but you may want to consider all of that.
Thank you, Mrs. Falarin. Oh my goodness, I wish we had more time. I wish I had the power to kind of pause time a little bit, but since I don't, I'll move right along. Ladies and gentlemen, I hope you're taking notes. You're like still posting the questions because we will still have a few minutes towards the end of the seminar to ask general questions. So please feel free to post them on the live chat. Okay, so our next speaker panelist, once again, there are the two panelists that we've brought today are experts in their field, as I mentioned in the beginning of the seminar. And Mr. Wilson Tawe is not a stranger to this field of life and financial and health and property management and estate planning and all that. So I am very, very delighted to welcome Mr. Wilson Tawe. And his life started 5 decades ago, so you can guess how old he is, in a remote village in the Central African country of Cameroon as the 4th child of a large family of 9. His educational journey spanned 3 continents: undergraduate in biochemistry from Cameroon, doctorate in biotechnology from Germany, Masters of Business Administration in Management in the United States. He's a career scientist and business person, having worked for major biotechnology and pharmaceutical companies around the world. He's a family man. He lives in New Jersey with his wife and 3 children, 20, 19, and 16-year-old. Mr. Tawe is passionate about entrepreneurship, having gained skills while serving as an executive business leader at the companies he's worked for the past 20 years. Currently, Mr. Tawe is focused on coaching families to build financial independence by funding and helping small businesses make smart financial and investment decisions. He's also extended his knowledge and skills to help families plan for financial futures by way of family budgeting, debt and risk management, and overall estate planning. Mr. Tawe is an avid investor in a variety of sectors, including the stock market, real estate, and cryptocurrencies. He sits on the board of directors of a privately held biotech company and a private equity firm. He and his wife have been owners of an eye care clinic in the suburban of New Jersey for over 10 years. Ladies and gentlemen, please welcome with me, Mr. Wilson Tawe.
Thank you so very much, Mrs. Latunde. Wow, Mrs. Falarin, that was a very insightful. Thanks for the insightful and passionate plea for everybody to look at making their lives better. Thank you, Mrs. Latunde, for the introduction. I will start by touching on a few topics that, if not already, should be of interest to everyone who cares about how to plan for the future, regardless of your age and how little or how much you earn. First off, next slide, I'll put my disclaimer. I'm representing myself here, and everything I say here, I'm responsible for. Next slide, please. So I'm going to touch on a few financial pillars, that what I consider financial pillars. There could be a whole laundry list of it, but I'm going to touch on these 6. And the one that I've highlighted, wealth preservation, is probably going to be one I'm going to focus on a little more on this talk. We know your future depends on how you address your financial circumstances. I'm going to go back to the previous slide, please. Yes, thank you. Your future depends on how you address your financial circumstances. There's no one way of preparing for the future that is right for everyone, but there are common elements. It all begins with your understanding of the foundational elements of planning for your future. Please make sure you consult with your financial advisor for guidance on what will suit your particular needs, okay? Knowing how much cash you have on hand and after you've met all your monthly financial obligations is a good indicator of your financial strength. Some knowledge of household budgeting definitely helps here. Negative cash flow may indicate that you're spending more than you're earning. Not a good idea. Positive cash flow, though, means you're spending less than you're earning, and you have if there's any cash left over, that can be used to pay down debt faster or put you towards your financial goals and dreams. So when your debt is under control, you can free up some money for an emergency fund. The cash reserves can be lifesavers if you had to encounter an unexpected financial setback like a job loss or major car repair, for instance. If debt management is one of your problems, excuse me, you're not alone. On average, the US household carries about $10,000 of revolving credit. These are balances that carry on from one month to the next. The good news, there's a way out to clear up your financial blemishes so that you have a better financial outlook and you can have better control of your debt situation rather than sweeping it under the rug. Seek help on debt management if you need to. Strong cash flow, an emergency fund, and managing your debt are essential elements of establishing a strong financial foundation. Proper protection can bring even more in reach. Our sister, Mrs. Falarin, talked about life insurance. This is something that you would consider as it makes it easier for your family to move on if something were to happen to you. We're going to talk about that quite a bit here. So during the process of building wealth, you gain the power to work towards your long and short-term financial goals. You don't have to wait until you've completed the previous 4 steps, that is cash flow, emergency fund, debt management, to be able to build wealth. Putting aside a little cash towards your future goals makes sense even if you work on managing debt by yourself. You want to build an emergency fund, you want to strengthen your cash flow, you want to protect the ones you love, and by doing so, you give this money, even if it's just a few dollars, not more time to grow as you conquer your financial challenges and free up even more cash for your wealth building. As you build wealth, you sustain yourself through your golden ages. Also think about your legacy, which is going to be the focus of this conversation, because having a financial plan in place can help you ensure that your legacy reaches your intended heirs. It is best to make those preparations as soon as possible because the future is unpredictable. So touching on these 6 points actually introduces you to my presentation tonight, where I'm going to talk a lot about wealth preservation. Ms. Falarin talked about life insurance. She talked about, very passionately for that matter, about the need to be able to protect yourself in the case of a sudden event. We're not only talking here of financial consequences, but there's also emotional consequences involved in making sure that your family is protected. Next slide, please. So I'm going to touch on the basics of estate planning, which basically is a concept that comprises various items of property and assets you own. Okay, that's what an estate is. It's an essential component of estate planning to understand what you own solely and what property you jointly own with someone else. A good estate plan starts with making sure that you inventory with very high accuracy, by the way, the content of your estate so that it can be easier to double check as you get along. Just to get you in the right mindset here, here's an idea of the types of property that you want to make that make up your estate. Real estate and real property such as house and land, bank accounts that only have your name on them, stocks and other securities, life insurance policies, personal property, that's movable property, for example, automobiles, jewelry, artwork, etc., retirement assets, retirement accounts, and other financial assets as well. So estate planning is a process of designating who will receive your assets and handle your responsibilities after death or incapacitation. One goal of this process is to ensure that beneficiaries receive assets in a way that minimizes estate tax, gift tax, income tax, and other taxes. As mentioned in the disclaimer, please, there's a lot of legal lingo in what I'm talking about here, but always make sure, please, to consult with your financial professional and your tax advisor as well. Okay, so a comprehensive estate plan includes documents that are effective during your lifetime, as well as other documents that are ineffective until your death. Together, these documents contemplate who has the power to make healthcare and financial decisions on your behalf during your life and who receive your assets at death. Needless to say, a comprehensive plan can provide you with the peace of mind and lessen the burden on your loved ones during difficult times. Next slide, please. So just touching on what this whole estate plan is, I'm going to talk about these essential elements of the estate plan, and then I'll elaborate. I'll pick up one or two from these and elaborate a little bit more before I go into some technicalities. So what are the elements of an estate plan? Your will basically defines what will happen to your assets, such as money, real estate, and possessions when you die. Trust, which can either be revocable, where you are the grantor and trustee during your lifetime, moving property in and out of your trust and using the assets in the trust as if they were your own in your own name. Trust can also be irrevocable, where you can't add or change the trust once it's established, and someone else must act as a trustee. Sometimes these trusts, such irrevocable trusts, are used to plan for Medicaid benefits and long-term care. The financial power of attorney, also known as general power of attorney, is nothing else but you're appointing someone else to manage your financial and legal affairs if you cannot. I say it a little bit simplistically here, but there's a lot of legal consequences of the will, the trust, financial power of attorney. So again, please refer back to your tax and legal counselors to clarify that before you make any decisions. Now, healthcare power of attorney, also known as healthcare proxy, I'm going to talk about in a little bit, is basically you appointing an agent, such as a trusted friend or relative, to make medical decisions for you if you cannot make them yourself. It gives you some control if you're ever unable to decide for yourself. Make sure that the person you choose is willing to serve this important role, as it's very critical. Advanced healthcare directives, such as living wills, are also very important. Describe your wishes for treatment and care if you're terminally ill and unable to communicate. A living will makes end-of-life decisions easier for healthcare providers and family members because they don't want to guess what you would have wanted. I'll touch a little bit on the two last, i.e. healthcare proxy and living will in a minute, but there's a whole lot more to consider. Next slide, please. Let's talk about probate a little bit, because at the end of the day, this is what it really boils down to, okay? Well, let's highlight it and look at its impact on estate planning. It's very important to know this. It's actually the elephant in the room when it comes to estate planning. Okay, what probate is basically a term for a legal process in which a will is reviewed to determine whether or not, or whether it's valid and authentic. Okay, probate can also refer to general administering of a deceased person's will, or the estate of a deceased person without a will. The second part of this statement is really critical. Deceased person's will, or the estate of a deceased person without a will. That's really what probate. So there's low-level probate and there's high-level probate. Low-level probate means you have a will in place, they look at it, everything polity, everybody's going. No will, you're stuck. I'm going to tell you a little bit more about the consequences. Okay. So one common aim of establishing of estate planning is basically reducing or eliminating the amount of assets that pass through probate. You must be aware that probate is not going to be a straightforward process without an estate plan. That's the second part of that first definition of probate. The probate process does not occur instantaneously. Okay, there may be a delay, sometimes significant delays, before beneficiaries receive or have access to assets. That's what a will would take care of if you had one. Court filings in a probate proceedings are generally accessible by anyone. So you're basically opening up yourself to the public. In addition, the probate process allows anyone to make a claim against an estate, whether valid or not, stretching the process even for a much longer time frame than desired. The opportunity to make a claim may be viewed by many as a loss of privacy, obviously. Creditors can make claims and receive assets instead of loved ones. More often than not, the proper beneficiaries receive assets through probate, but there's always an element of uncertainty in this process. Probate can also be very expensive. Assets, some states assess a probate fee. Attorneys may be involved and may be required to ensure proper disposition of assets from an estate. So this is a long, drawn-out process if in the absence of a living will, of a will rather. Anytime assets go through probate, there's potentially heirs can be disinherited. Directives in the will can be ignored if the will is improperly constructed. Likewise, conflicting wills can arise and the actual intent of the deceased can be superseded. Needless to say, all these documents I'm talking about is not something you bake in your kitchen. Technically, you can, but they're the implications of not having them right may be very, very far-reaching. Next slide, please. So I'm going to talk a little bit about advanced directives, living wills, and healthcare proxies, which kind of are the same in some cases, because living will, healthcare directives, advanced directives, they all refer to the same type of legal documents we talked about previously. And these documents basically, or this document lets people state their wishes for end-of-year medical care. Living wills are often used with a document called healthcare proxy. In some states, in fact, both documents are combined into one. Okay. There are more legal nuances on this topic that I'd like to address here. Myself, not being a legal advisor, I'll refrain from that. The goal here, though, on this forum is to nudge you to consider all these elements integral to your estate planning process. It's important to discuss your wishes with family members as well as with legal, health, and other appropriate professionals when preparing these documents. It is particularly important to talk about your wishes with everyone who might be involved in your care. In times of stress, others may confuse their own wishes with yours. So really very critical. Next slide, please. So let's move on to beneficiaries. This is a oft ignored designation, if you will. A good estate plan consists of all previously mentioned components, including your what happens with your assets, who should act on your behalf if you're unable to. And so at a bare minimum, there should be a last will and testament and a durable power of attorney. I'm calling out beneficiary here because it is important. It's not really a component of your estate plan, but it's an oft forgotten step in the estate planning process. All the documents that you have, and it doesn't really play a role if you have the assets up, if you have the assets set up with other accounts such as non-probate assets. So it's like it excludes that because documents such as or policies, your life insurance policies, an IRA, annuities, a 401k, these all have designated beneficiaries which override distribution set forth in the will. Therefore, if you're changing or updating your estate planning documents and do not also change or update your beneficiary designations on non-probate assets, distribution upon your death may not match. So beneficiaries may be designated as irrevocable, revocable, and contingent. I'm not going to go into all the definitions, but if you don't have a beneficiary set up for these accounts, it's important to take care of these as soon as possible. I'm talking of your 401k, your life insurance policy. These are non-beneficiary or non-probate assets. All the other assets that you have in your will, there should be named beneficiaries as well. Okay, so if you don't have a beneficiary names for these accounts, state and federal laws may determine how these benefits are distributed based on the type of account or retirement plan. That's when probate sets in. There are some plans that may automatically distribute your funds to the children or your spouse, while others may leave it to the estate, which may have tax consequences that you don't want for your beneficiaries, that you don't want your beneficiaries to take on. If you really want to control your assets and where they go, it's extremely important to name a beneficiary in all types of accounts. Next slide, please. I'm going to speed up here a little bit. Oh, yeah, speeding up when the elephant in the room comes. And in case you were just wondering if I'm obsessed with word clouds, yes, I am a little bit guilty as charged. I just managed to sneak one more in here, and I promise this may or may not be the last one. So anyway, let's talk about long-term care a little. Mrs. Falarin talked about that, mentioned it, and she kind of teed up my presentation here by nicely really highlighting long-term care as part of what we call a living benefit, critical care, living benefit, terminal illness, living benefit. Long-term care is really something you want to consider either as a standalone policy or whichever way you want to get it. Please pay close attention to the next set of slides I'm talking about here, because on the next few slides, I think this is where what I'm really going to emphasize on this talk over the next 5 minutes. Okay, so first of all, to buy long-term care, policy, you work with the financial advisor to fill out the application, choose the amount of coverage, and then obviously knowing that the policies usually cap the amount paid out per day and amount paid during the lifetime of the policy. Once you're approved by the insurance company, your coverage for the policy is issued. You begin paying premiums. On the long-term care policies, you're eligible for benefits when you can't do at least 2 of the 6 activities of daily living or ADLs on your own, or if you suffer from conditions such as dementia or other cognitive impairments such as cancer, malignancy, injury, nervous system disorders, stroke, diabetes, etc. The activities of daily living are eating, bathing, dressing, toileting, transferring, and continence. These are really critical to know because, and I'm going to give you some data that supports it. We're all going to go through it sooner or later. There's going to be a need for it. And I'm going to show you some numbers on the next slide that make the very solid argument for it and why you should consider having long-term care as part of your estate plan. So when you need the care and want to make a claim in the insurance policy will review the medical documents from your doctor and may send a nurse to do an evaluation. And then before approving the claim, the insurer must approve your plan of care. Under most policies, you'll have to pay a long-term care service out of pocket for a certain amount of time, such as a 30, 60, or 90-day period called an elimination period. And then the insurer starts reimbursing you for any care following that. The policy part starts paying up after you're eligible for benefits and usually after you receive paid care for that period. Most policies pay up a daily limit for care until you reach your lifetime maximum. Ms. Falarin said you could take 80% of the face value of an insurance policy with a long-term care benefit right on it, and that's going to be cash that you access during your lifetime when in need of long-term care. Some companies offer shared options for couples when both spouses buy policies. This lets you share the total amount of coverage, so you can draw from both spouses, such as a pool, and of benefits if you reach the limit on your policy. So you can kick the other spouse's policy might kick in after you've exhausted yours, possibly. Buying long-term care insurance can be a good choice for younger, relatively healthy people. Talked about that earlier. At low risk of needing long-term care. Costs go up when you're older, you have health problems, or if you want more benefits. Someone who is in poor health or already receiving end-of-life care services may not qualify for long-term care insurance. They may qualify, could be prohibitively expensive. Next slide, please. So let me just run you through this number. Very busy slide, but why do you need long-term care? Let's get introduced to some numbers here. At least 70% of people over 65 will need long-term care services at some point in their life. That's a given, okay? This is backed by statistics, because if you forget about everything else on this slide and pay attention to the red box in there, okay, that should be your takeaway, because it's talking about the claim history for homeowners policies, for auto insurance policies, and for long-term care policies. What these numbers mean is more than 1 in 2 Americans turning 65 will need some form of long-term care in their family. If you're paying for your auto insurance and paying for your health insurance and paying for accidents and all the insurances that you pay for, including home insurance, the number of claims that actually come out from those are way infinitely less than the number of claims that will go through on a long-term care policy. So over 50% of, we mentioned 70% earlier, but 70% of people over 65 will need some long-term care. all right? So another statistic, which is kind of shocking, is, less than 20% of consumers have actually discussed long-term care planning with a financial professional. I don't know why, but those are statistics, are raw statistics that we're sharing here. Note, though, that Medicare and health insurance plans, including Medicare supplement insurance like Medigap policies, do not pay for this type of care. Long-term care can be provided at home, in the community, in an assisted living facility, or in a nursing home. If there's anything to take away from this slide, take a look at this red box again. It is important. Can you click on the slide for the next? It's kind of, yeah. I thought we should throw that up there. It's important to include long-term care as part of your estate planning to be able to maintain your independence and to make sure that you get the care you will need and in the setting that you want. It is your life, and it should be your choices as well. Next slide, please. So, excuse me, just a few bullet points. I'm gonna just skim through them. You'll have access to this again. There's no doubt that planning for long-term care is challenging, mainly because it's difficult to balance savings for long-term care with other financial goals, such as saving for college or buying a house. However, the typical head in the sand approach of, oh, I'll ignore it and it'll go away. This doesn't work here. It's not a plan. So tough conversations around the importance of financial risk of aging, which we all have to go through, have to be made. Unless you plan now, you can't be sure that your goals will be accomplished. So 10 reasons why you should be talking about long-term care today is it's part of your retirement planning. Your loved ones are counting on you. It's beneficial to act sooner rather than later. We talked about that, the cost. Medicare and Medicaid won't cover it, that's for sure. You don't want to foot the bill. This point, you don't want to foot the bill, is something that we always consider when we talk about estate planning, because even the rich and the wealthy, they have insurance policies, so they don't have to pull the money out of their pockets to do what they need to do with it. So it's not for the rich, it's not for the wealthy, it's for everybody to have such coverage. Okay, it may cost more than you think. People get flat-footed when the bill comes for long-term care. You and your spouse may not be on the same page, so you want to consider that. Your family needs a plan. Planning for professional caregiving is often a smart idea. Good health doesn't make you exempt from planning. Simply put, even if you're in good health and you are at an advanced age, there's a likelihood that something similar will befall you, or that you'll get into a long-term care situation. We saw the stats earlier, 70% of 65-year-olds and above will encounter a long-term care situation. So let's assume that we're going to be part of that 65 and make plans today when we're still under 65. For some of you who are still under 65, I'm sure it applies to all of you, but it is critical. It's a critical component of your long-term care plan. Next slide, please. So let's talk a little bit about the planning process and the decision-making process, all right? Long-term care basically is the kind of care you need if you're not able to perform normal daily activities without help. It's expected that you will need this help for an extended period of time or the rest of your life. It can be provided at home, an assisted living facility, nursing home. All of these can be very expensive, with care provided in a private room at a nursing home typically being the most expensive. Few of us here are caregivers, and we know how some supposedly wealthy residents or patients are taken good care of. You can actually see the difference between someone who maybe have a lot of cash, but for the most part, they've taken care of that expense in their earlier years by getting a long-term care type insurance policy. And some who hadn't planned are really not getting the best of care, as you can see by the differences in the different type of facilities that we have taking care of the elderly. Next slide, please. So what's the decision-making process? It's, again, as I said, long-term care is not covered by health insurance, disability income insurance, or Medicare. Health insurance plans cover nursing homes, expense only for a short period of time while you're recovering from illness or injury. Disability insurance will replace part of your income if you're not able to work after a specified time, but it doesn't pay for long-term care. Medicare, which covers most people over the age of 65, provides limited coverage for skilled care for up to 100 days immediately following hospitalization. After that, you're on your own. So who will pay the cost for long-term care? The three sources: you or your family, that's you, your assets, Medicaid, and long-term care. So you is cash, okay? You have write a check out and it's all done. That's fine if you have. Medicaid pays only the bills Medicaid pays the bills for a large number of people in nursing homes today. But because the program is designed to provide services for those who cannot support themselves, that is children, disabled, incapacitated, low-income individuals, you have to spend down your assets to be practically penniless to qualify for your benefits. I'd rather not go that route. In addition, your spouse is also limited to the amount of assets he or she can have. Also, you will be able to receive care from a facility that you'll only be able to receive care from a facility that accepts Medicaid. In certain cases, you have to travel very long distances to be able to get that. If you have minimal assets, Medicaid might be the option for you. But for many people, long-term care insurance is the best option, especially if you have assets and income you want to protect. You want to avoid being a financial burden onto others. You want to have some choice in the care you receive. With long-term care insurance, you will have the option to receive care in your home or a private pay facility. The premiums are lower when you're younger, in good health. If you wait too long, the cost could be prohibitive, like I said earlier, and you may not qualify. I'm not going to go too deep into that, but let me run you through like 5 slides here as kind of a speed date here, just to reinforce the reason why you shouldn't wait to have a conversation around long-term care. We talked already about who's going to pay for it. Okay, sometimes conversations come a little too late. Next slide, please. Yeah, I already talked about this. Next slide. And then there's also the who will pay for long-term care, not health insurance, not Medicare, not Medicaid under certain, or Medicaid under certain circumstances. These numbers speak for themselves. There's a huge need to start talking about long-term care insurance today if you want to protect your assets from being depleted in the event of a long-term care situation. There's a caregiver shortage, and it started to decline already. Of course, nursing homes care is skyrocketing, and it's going to increase annually as well. So the sooner you can start planning for this, the better. Okay. Next slide, please. Mentioned this stat already. This is 70% of the people turning 65. You can expect to have some long-term care during their lives. So the likelihood that you or myself will fall into a situation like this is pretty high. Next slide, please. So this just takes you through some of the changes that are happening as we speak. I wanted to highlight this because, of course, the impact or the importance of long-term care, it's not only, the impact is not only felt by the family, but the reach at which the long-term care situations have an impact on even state and federal institutions are very far-reaching. So just this year, Washington State established a long-term care tax. Came with a lot of resistance, and people were kicking and screaming. But because the state had already figured out that the burden that long-term care, especially in Medicaid and other situations, the burden that it was exerting on the state, they decided to impose a mandatory low-cost 58 cents for every $100 of wage for employees to be taxed starting January 2022. The trust is designed to provide eligible Washington residents with up to $100 per day, with a maximum lifetime limit of $36,500 to pay for long-term care services, including professional care at home, nursing facilities, and elsewhere. And the graphic, basically, it's not quite clear to read, but the benefit here is over a long term, the Washington state itself, it decreases the burden that long-term care needs of their residents have on the state coffers themselves. So this is the first in the country, and I would be surprised to see that some states adopt this as well. Needless to say, even at state level, it is important that or what we're seeing here is a need for long-term care, even if it's not your particular desire to have it going, okay? So next slide. So if you're like many Americans, you likely don't have a plan for long-term care. It's very likely that you will need it at some point. I want to touch here a little bit on not only, we talked about the financial burden or the cost of long-term care, the financial burden of long-term care, but there's more to it. There's the emotional burden of providing care, okay? The fiscal burden and difficulty of care, the time burden of providing long-term care, and then this financial cost and health consequences and lost earnings as well. So these are all elements that we don't look at. We only look at the cost, typically look at the cost, but there's a whole lot more surrounding that where, you know, the family could actually crumble physically, financially, emotionally as well. And so for the love of the family, to make sure that you're taken care of, you know, we want to start thinking hard about long-term care as part of our estate plan. Notice though that I didn't say estate planning was only for the rich, yeah? Go ahead and pull up this last slide, please. So this slide just tells you that, you know, whether you're a caregiver or may someday receive long-term care, costs could derail your plans. You have to work with your financial professional to building a long-term care strategy as part of your financial plan. Okay, most adults, most of us haven't discussed long-term care costs. 45% only of us have discussed long-term care with anyone, and less than 10% have talked to a financial professional about it. This is your moment, you know, I'd appeal to you to think about bringing this up, having a conversation with your loved ones, and putting a long-term care strategy as part of your estate planning. With that, I'm going to say thank you. Thanks for listening, and I'll hand it over back to the moderator. Thank you.
Thank you, thank you, thank you so much, Mr. Tawe. I mean, as you were speaking, questions were coming in. What a wonderful presentation one more time. We really, really appreciate your time. I'm going to go straight because of our time. Time goes so quickly when you're having fun, right? Because of our time, I'll dive right into the questions. So the first question, there was a lot of questions about advanced directives. And so I'm going to ask a few of them, and maybe you can just touch more. And I'll also say, please be mindful of time. But in terms of the question, advanced directive, Someone says, at what age should I consider advance directive? Can I still make my own health decision if I have signed an advance directive? Can my healthcare agent override my decisions? When should I make again, this goes back to the age, what age? And do I need a lawyer to write my AD? What happens if I don't have an advance directives? How will my wishes be considered if I'm unable to speak to myself? So in a short, brief, concise way, if you can answer those questions around advance directives.
For sure, for sure. I wasn't taking down the questions, but I heard what age. You know, advance directives are basically a legal document. Everyone at over the age of 18 should have advance directives on file. People always think, you know, they're too healthy to have advance directives, but that's a mistake. If you need a lawyer, yes and no, I would say. Advance directives have to be in writing though, and there's a lot of states that, or different states mandate different type of language in the advance directives. Luckily, a lot of states, most states have actual forms that you can just go ahead and fill out to create a legal document. So depending on where you live, the form may be needed, and it could be signed by a witness, it could be signed and notarized, and then you can basically ask your lawyer to do that for you as well if you need to. I'm not sure, you talked about if you don't have,
if the person is unable,
can your advance directives be?
If someone is unable to speak, can their wishes or the wishes on their ADs still be respected, be honored? Or even if they don't have an advance directives, how would their wishes be considered if they're unable to speak for themselves? That's the question.
So if you're unable to speak for yourself, typically the state will assign somebody to make a decision on your behalf. This will be likely your spouse, or your parents if available, or your children if they're adults. So if you don't have any of the above, then the advance directives are basically taken over by the state. And that's where, you know, you really want to make sure that you have an advance directive, discuss with your family and with your physician as well, of your caregiver.
Okay.
Now, in terms of being able to make your own healthcare decisions, if you already have your advance directives, absolutely. You know, you want to, as long as you still have cognitive abilities, you should be able to make your advance directives and change them whenever you want.
That's good to know, because someone was asking if they've made an advance directives, can they change it? So that's good to know that you can still change as long as it sounds like as long as you're able to speak for yourself, you can still change your advance directives or update it as you go. So thank you for that.
You want to state what you want to do and what you want and what you don't want. You know, there's plenty of examples I can cite here, but for the interest of time, I am going to pass on that, and happy to answer any questions offline as well.
Thank you. Thank you. This next question is to Mrs. Falarin. So someone is asking, what happens if one loses their job and is unable to make monthly premium on life or disability insurance? And I think you alluded to it again, but for the sake of this question that came in not too long ago, please go ahead, ma'am.
You have a grace period, and I already mentioned that you may want to discuss with your insurance agent or your professional to put that rider in. Payment of premium, in case you're not able to make your payment, make sure you have a rider. If you have a permanent life insurance, your premium will continue to be paid based on the accumulation of cash that you have. But if you have term life insurance, you don't have that opportunity, so you have to have a rider, or you pretty much have to have a rider to have that continued.
Thank you. Thank you. So you alluded to rider earlier, and you're explaining it again, so we appreciate that. Mr. Tawe, I'm going to go back to you because somebody also asked here, how can we better prepare in terms of insurance for our aging parents who don't have these coverages due to lack of knowledge as first-generation immigrant? And Mr. Tawe can answer, and Mrs. Falarin, if you want to also chip in, you can do that as well.
Yeah, so basically for aging, health insurance is not, or rather life insurance doesn't discriminate, okay? I believe Ms. Falarin said it earlier that, and I also emphasize on that, as you get older, it doesn't matter that, you can still qualify for life insurance. It's just gonna get more expensive because, actuarials have done the studies and said the likelihood between when you purchase the insurance and when you're gone, that gap, that distance between when you get it and when you're gone, the shorter it is, the more expensive it becomes. Also, health considerations as well. Of course, if you're elderly, you're likely to be in a situation where you're not exactly squeaky clean health-wise.
Thank you. Mrs. Falarin, did you have any input to that as well?
No, that's pretty much it. If you still have an elderly in the house, please get them life insurance. Do not go put your hope on GoFundMe so you can give them a befitting send-off when it is time. And so it might cost you a little bit more because you waited a long time, but please get them life insurance. You still can get it now.
Thank you. Thank you both. Thank you both. This question, I'm going to have to read it out. It's very long and it's also in line with parent and life insurance and whatnot. But this question was sent in early and it's being repeated again. I have elderly parents who have existing health conditions. Oftentimes, I find myself in a situation where I feel compelled to help them financially when they run into issues. As they get older, this situation is only bound to increase in frequency. I'd like to know if there are good insurance products that I can purchase now that can help them out in their medical expenses. Additionally, should I look into long-term care now if and when one of them needs the assistance of a home care provider? And any of you can take a stab at the question.
Well, as far as medical insurance, depending on the age, if you're trying to get them like a health insurance now, it's going to cost you a arm and a leg. They may qualify for Medicaid or Medicare. Based on the information you provided, that might be the best option for them right now. And if for some reason they do not qualify, which I don't know if there's any reason why they would not qualify at this age, then you may want to get some type of health insurance to protect them. Let Mr. Tawe answer the long-term care because then the question of eligibility and qualification is going to arise based on the pre-existing condition that they have. So, Mr. Tawe.
Correct. Unlike health insurance, that can be a little bit forgiving in terms of pre-existing conditions by law. Life insurance is very, and long-term care as well, if it's packaged within a life insurance policy, which is kind of the most, or which is getting more and more popular. They're very discriminative because obviously a payout is anticipated upon the death of the individual. So there's exclusions that would disqualify, even a 20-year-old can be disqualified from a life insurance policy, possibly. Again, just like Ms. Falarin said, there's a lot of insurance companies out there, some of whom will just outright deny an application, some of which will probably go dig up a little bit more about your health condition or health situation, depending on if it's managed or not. And some of which are a little bit more lenient, but at the end of the day, the worse off you are, it doesn't matter that you're old or young. The worse off you are health-wise, the less favorable is your policy going to be in terms of cost.
And I'd like to add this, and this is not for the older folks, it's for the younger folks. If you're still working, this is why the group health insurance is good from your job. Or if you're self-employed, you want to get that one with your family, just make sure you're up to 3 minimum, because most of the group life and health insurance do not go into pre-existing conditions. That's one cheat sheet right there. You get it? They're not doing medical and all of that, but you may not be able to get the $1 million life insurance and all of that, but you will be able to get life insurance through your group at your job, or, for you and your spouse and any member of your immediate family. So that's one way there. If you're young and you have health issues, you can, get it through that option.
Thank you so much. Thank you so much, Mr. Tower. Thank you so much, Mrs. Falarin. I wish we had so much time to ask so many more questions, but just a few more that I will direct to either of you. Someone said, God forbid, while someone is on life support, how does advanced directive, and I think this question probably Mr. Tower can take this, how does advanced directives play a role? Can the AD help prolong the length of time you can stay on before it is turned off?
Absolutely. One of the reasons why I want to have the healthcare advanced directive or healthcare proxy is to make sure that your will's respected. Again, that's your wish, what you want and what you don't want. It's very delicate as well when it comes to the technicalities. Yes, life support. If you had in your advanced directives that they can only have you on life support for so many days or not at all, that's what's going to be respected. So, but there's also conflict between you being on life support and your family's wishes as well. But in a situation where the physician is involved, your advanced directives or your living will and everything is in place, they're going to follow that those orders naturally. It doesn't come with just like, okay, here's your advanced directive, this is what we're going to do. But there's a strong and hard conversation between your caregivers and your family as well to make sure that your wishes are respected.
Thank you, Mr. Tawe. Mrs. Falarin, this question is directed to you. Can you touch a little on business owners insurance for small? And I think again you did this earlier, but someone wants to ask. Someone is asking if you can touch briefly more on it. What kind of health insurance or life insurance that small business owners can purchase for themselves, or for if they have small employees?
You can purchase everything that we discussed earlier on. You can purchase the group health insurance, even if you have just one employee and your employee has a spouse or immediate family member, as long as you're up to 3. Some other companies may require up to 5. You can buy that group health insurance for yourself. You can buy the group life insurance as well, and all these other voluntary benefits. You can choose all of them. You can choose the ones that are, that are more important to you under the group. So everything is available to you as a business owner. In terms of life insurance, if you're by yourself, what happens? You have to have a plan in place for your business should something happen to you. And if you have a partnership, then you want to talk about the your partnership insurance, life insurance for your partners, and you have to have an agreement in place. And I'm sure Mr. Tawe talked a little bit about that earlier, that if something happens to one partner in the business, you have to have a written agreement in place, and you have to have some type of life insurance whereby that person not being there doesn't kill the business. So those are the kind of things you want to look into.
Thank you so much. Okay. We're rounding up. I want to ask both of you to please speak briefly. Mrs. Falarin can go first. To speak briefly about open enrollment. It's coming up. I think it's starting this month. And so what should people look out for? If you're at your place of work. I remember when I open enrollment season, it's like, okay, well, let me just sign up for my health insurance. Let me choose the one that I only paid the least deductible, so they don't take money out of my my paycheck. And as long as I'm not seeing a doctor every time, I'm young, I'm healthy. So what should people really, to maximize their deductibles, the money, the co-pays, and everything that they're putting into this open enrollment and benefits, what should people really look out for? I'm not just saying because, okay, I just want to be covered.
Open enrollment actually opened up for most companies on November 1st, and it runs through for most companies runs through December 15. And if you enroll during that period, your protection or coverage kicks in on January 1st of the following year. And so this is the time to ask the questions from your employers. This is the time for you to look through the available benefits, the health insurance. Do you have personal life insurance? If not, you want to sign up for the one at your job, especially if you have a pre-existing condition that's going to make it cost you a lot more if you get it on your own. So you want to make sure you put that in. You want to find out if it covers your spouses, your family members, and anyone else. You want to put all of that in. Yes, I know the questions of payment, how much are they going to be deducting out of my paycheck, is what concerns the people the most. So you're not looking at the minimum amount, you're looking for the benefit. So you want to look at what you need the most. If this happens, can I cope? If that happens, can I cope? Can I make up? So this is more important than this for me, so I'll take this too. So you want to look into that. And also, I wanted to talk about something real quick, and it just flew off my head. Maybe I'll come back to it in a minute, in terms of this group life insurance that you can get from your job, but get as much as you can. It saves you money. Oh yes, and one more thing. If you have life insurance at your job and you have benefits at your job, ask them if it is portable. If you leave that job, or if they lay you off, can you take it with you? Because some companies will allow you to take your benefits with you and you can pay out of pocket. So you want to talk directly to the company to see if it is portable. And also life insurance. Most of this life insurance, yes, you get them at your job, but what happens when you leave the job? Can you take it with you? Because if you leave the job at the age of 60 and now your life insurance is over because you can't take it with you and you don't have a personal life insurance, it becomes so expensive for you to get your own life insurance. And maybe at that time you have some medical issues. So what happens? So you have to think about all of this when you're making the decision. So if you're thinking, if you know this job, I'm going to be there for the next 20 years and you're sure you can guarantee it, that's fine. Get your life insurance with them, but make sure it's portable. And if it's not portable, get some type of life insurance on the side. Get some type of protection for yourself and your family.
Thank you. Thank you so much, Mrs. Falarin. Yeah. Go ahead, Mr. Tawe.
I would go further by saying, make the assumption. I think the assumption that policies aren't portable is a safe one to make. So go ahead and sign up for one for yourself, because you could be caught flat-footed. You may plan on staying with the company for so long, and the company might collapse. You can be fired. So things like that are variables that you want to consider. The one thing I want to talk about. Open enrollment, it gives you basically a chance to re-enroll into healthcare if you opted out the previous year. You want to look at your medical history, think of what's at stake. You might have made a misstep last year and not signed up, and this year you had hospital bills going off the chart. So you want to consider that it's a very good idea to have, because the job offered health insurance is probably, arguably, or even definitely the least expensive that you will ever have, or you'll ever be able to, especially because your job typically would contribute to a portion of your health insurance as well. Not all jobs do that, but the majority of them do. So sign up not only at open enrollment, but during the course of the year. If there's any family changes and stuff, you can certainly enroll. The one thing I wanted to point out, and Ms. Falarin said that, I just wanted to emphasize on why you shouldn't be looking at just the cost, look at the benefits as well. It's very, very important, because those deductibles can be very, very brutal on you if you choose a low paying or a low cost health insurance. Not only is it costly in terms of your deductibles, but also accessibility to healthcare providers is also hampered. You may find yourself driving for a whole lot longer to get to the care, to get the care that you need. So sometimes when you're looking at examining a healthcare insurance policy, look at what it really offers and how much coverage in terms of geography your provider or your your providers are available in the United States. So really very important considerations to make during the open enrollment.
Thank you so much, Mr. Tawe, Mrs. Falarin. I really, on behalf of Rapha Health and Ministry, Fitness Ministry, I want to say a big thank you. You guys, you both have made a huge difference in helping us to reach our audience, both locally and even globally, because we do have folks who are watching from out of United States. Thank you so much. Listeners, viewers, we do have a SurveyMonkey link that we posted in the chat. We want to encourage you to please click on that to answer a few questions, and that will help our department with future programs to find out what topics you want us to bring to you. I'm sure you guys have very positive feedbacks that that you want to share, or like, you know, even if it's like, oh, this is an area we can improve, we certainly welcome it as a department. So I really just want to thank Mrs. Falarin and Mr. Tawe again. There's so many more questions that we couldn't get to, and I wish we had more time. But to end on a lighter note, I always like to ask my panelists on a lighter note. Here in Maryland, I'm in Maryland, United States, I feel like we've skipped fall and just jumped right into winter because it's so cold and it's like, So I would like to ask you, and Mrs. Falarin can go first, where is your favorite vacation spot? If you want to reveal it to us. If you don't want to reveal the favorite one, if you want to do the second favorite, we welcome that as well.
It's Paris. That's my favorite.
Well, it's cold. Isn't it cold in Paris now?
It is cold, but I just like being there. City of Light. This time of the year is just so beautiful. You forget about the weather. I just dress up warmly.
I agree. Thank you very much for sharing that. And maybe when you're going next time, just let me know. I'll pack my bag. Mr. Tawe, what about you? Same question.
I would definitely head somewhere warm. Turns out, I don't know, it's by chance or by choice that right now I'm in one of my favorite vacation spots. That's Dubai. So it's 9:54 here where I am, and it's beautiful. It's still warm, 85 degrees today. Yeah, so I like warm places, especially when it starts getting cold. I live in Jersey, so we have the same kind of weather conditions. So.
Thank you for sharing that as well. Again, you should have let me know so I can carry my bag and go to Dubai with you.
Next time.
Thank you. I'll hold you up to that. Viewers, this program couldn't have been a success. It couldn't have been possible without the support of our church leaders. As I mentioned at the beginning, Rapha Health is a ministry. It's one of the ministries of JesusHouse, DC. We're located in Silver Spring, downtown Silver Spring, Maryland. And our leaders, our senior pastors are Pastor Gandhi and Pastor Omo Olaoye. And without them, Rapha Health and Fitness Ministry couldn't be bringing all these types of programs to you. So we want to thank them because they have given us the platform to reach, like I said earlier, hundreds, if not thousands of lives by bringing message of love and the good news of Christ. So we want to thank them for that. Our minister in charge is Dr. Olumide Ogunjuyibe. We want to thank him for his continual support of this ministry. It's always good to have a minister who's on your side, who's like, you guys can do this. He's always encouraging us. And so we want to use the opportunity to say thank you to him as well. I do want to thank our head and our assistant head of department, Drs. Desala and Dr. Falake. Thank you guys so much for, again, your exemplary leadership and for giving me the opportunity to be the moderator for this particular seminar. Thank you so much. I do want to thank every team member of the Rapha Health Ministry. You guys have been amazing. You're wonderful. If you have questions, I know there were so many questions that we couldn't get to. If you have specific questions that you want to ask any of our panelists today, Rapha Health and Fitness Ministries email address is on the screen. Please copy it down. Ask your questions, send your questions there. We will send those questions to our panelists and they can give you the answers, and then we can send it back to you. And also the slides will be available to you. So we can also, if you want it, you can reach out to us through that email on the screen, and we'll send the slides to you. And the other thing too is, our panelists, they are business owners, as I read in the bio earlier. They're business owners. If you wanted to reach out to them directly, Mr. Tawe's information is on the screen. I should call him Dr. Tawe, but he said no. Mr. Tawe is good, just so you know. If someone's like, he has a PhD, why is she calling him Mr.? He wanted to be called Mr. Tawe. His information is on the screen. Please feel free to reach out to him. If you want to reach Mrs. Falarin, Felicia Falarin, our information is on the screen as well. Please feel free to reach out to them on their website. They are I'm telling you, they're a great source of information. They're a wealth of information that they have not been able to share on this program here. But I hope that you will also share this link with a lot of your friends and family members to just get the information started. We talked about long-term care. We talked about health insurance, life insurance, estate planning, debt management. And these are the things that really, we think that the rich get wealthy because, they make a lot of money. It's because they're very calculated about how they plan for all these things, for their estate, their future, and that of their children. And I wanted to leave us with a Bible verse that says, a good man leaves inheritance, not only for his children, but for his children's children, for his grandchildren. And so I want to encourage you to please share this link with someone or 2 people or 10 people that you know. Watch it again, and then again, reach out to our panelists. They are more than happy to answer your questions. Or even if you want to reach out to Rapha Health itself, we're more than happy to send your questions along to them. Last but not least, I want to thank, before I thank the people I wanted to thank, I do want to thank every member of Rapha team for coming together and making this program a success. And then last but definitely not the least, I want to thank you, our viewers, for always showing up, because we could have put this together and we could have been talking to ourselves, and no one shows up, then it's of no benefit, maybe just to us alone. But we don't want to just be the only ones enjoying this. So we want to thank you for always showing up and encouraging us and giving us the opportunity to bless you as well. So without further ado, I want to say thank you. And until next time, we'll see you, and God bless. Bye.
Bye.
Thank you. Bye-bye.
Yeah.